The fourth way that wealthy people look at money differently is they understand that money has no limits. For the average person, when they think about money, what they think is, I'm making $50,000 a year right now. And if I could get a 10% raise, if I could go from $50,000 to $55,000, that would buy me a lot of freedom, and now I can go out and do a lot more things. This is a 10% raise. What wealthy people think is, okay, I'm making $50,000 a year right now. How can I turn this to $500,000 a year? Actually, is it possible for me to turn this into $5 million a year? You can start to see there's a very big gap between these two things. Now you might say, well, Jaspreet, this is just unrealistic thinking. You're thinking about magic and fairy tales, which is not possible. What the reality is if you start thinking a little bit differently, and if you stop creating these invisible barriers around you, now what you might do is you might say, okay, I'm at 50 grand right now. I want to go to $5 million a year. In order for me to go to $5 million a year, what do I need to do? Well, let's break this down. There's 365 days in a year. And $5 million divided by 365 days is about $13,000 a day. It's between $13,000 to $14,000 a day, which is almost how much money you're making a year right now. How do you go from $50,000 a year to $13,000 to $14,000 a day? Now you start doing some research. Well, how can I start by making $10,000 a month? And you start watching YouTube videos, you start reading books on building businesses and creating new income streams, because it's not going to happen from your job. You're going to have to do something a little bit different. And now you start reading books and you try some things. And you know what's going to happen? You're going to invest $3,000 out of your $50,000 that you earn, and you are going to lose it. You're going to start a business idea and it's going to go nowhere. And now you're going to be really bummed. You were hoping that you can make $500,000 or $5 million a year. Now you just lost $3,000 out of your $50,000. That's a lot of money when you're making $50,000 a year. But if you stick with it, now what you might see is you learned a lot in this loss. And now the next time you invest $3,000, you might make that money back, plus a little bit more. And then you do another one, and now you make even more money, and then some more. And before you know it, a few years later, now you might be at the $10,000 a month. Still, you're quite a bit away from here, but now you're on pace to earn a lot more. Because if you can get to $10,000 a month, what's stopping you from taking that from $10,000 to $50,000 a month? And if you can do $50,000 a month, well, what's stopping you from taking that $50,000 a month to $100,000 a month? And if you could do $100,000 a month, well, what's stopping you from taking that to $1 million a month? And this is where now you start to see that many times we create these invisible barriers around ourselves. I've been there. And the reality is there's a lot of money in the world. There are people making a lot of money. Warren Buffett, for example, is making more than $1 million a day. A day just in passive income from dividends. In fact, it's closer to 10 times that. And this is money he's generating doing nothing except owning the right stocks. So, if you want to earn more money, understand there's a lot of money in the world. You don't have to limit yourself with just a 5 or 10% raise. But if you want to earn more, you're going to have to take bigger risks. And that means you're going to have to go out and learn. You're going to have to risk your time. You're going to have to risk your money. But the potential is there. And if that's something you want, well, now you're going to have to go out and do something about it. And then the fifth thing that wealthy people understand is that scared money doesn't make money. If you have some extra money laying around and you put it into a savings account, you're going to earn a little bit of interest on it. If you take the same money and you put it into a certificate of deposit, a CD that your bank has to offer, you're going to earn a little bit more. Why a little bit more? Because it's still very safe. But now when you put it into a CD, you have to lock it up for a year or 5 years. So because it's locked up, you get rewarded with a little bit more interest. If you take the same money and you put it into the stock market or the real estate market, well, now you can earn even more money. But it's more risky because the stock market can go down, the real estate market can go down, tenants can destroy your property, a stock can go bankrupt. So you're taking on some more risk, but you can be rewarded with higher potential returns. If you take the same money and you invest it into your own business idea, well, now you can earn even more money. In fact, you have the highest potential returns here. In fact, there are no limits to how much you can earn here when you start your own business. But you're most likely to fail if you do this. 9 out of 10 startups fail within the first 5 years. But you also have the highest potential. Notice, as you go down this, your risk goes up, but your higher potential returns also go up. And the problem is most people stick here because they're scared. Maybe they go here and you put your money into a CD. That way you can get some guaranteed interest, because everybody says, how do I get a guaranteed return on my money? Well, there you go. This is essentially guaranteed. The only way you don't get this is if your bank goes bankrupt, but hopefully you'll also still be FDIC insured. You don't have those insurances here. If you start a business and your business fails, nobody's going to come in and write you a check, unless you're, of course, a bank that's too big to fail and the government bails you out. But that's a topic for a different video. But if you fail here, nobody comes in and bails you out. So you're taking on higher risk. But in exchange for the higher risk, you get higher potential returns, the higher reward. So this is where now you got to understand. If you want to actually see higher returns, you got to do more things with your money. And if you keep your money here, fine. Yeah, you're going to get the lower returns, but you're also going to see your savings get eaten away by inflation. And you also miss out on the opportunities to grow here and here. So you can choose now which route you'd rather take. But if you want to build wealth and you want to build more wealth, you're going to have to take some risk with your money and your time. If you enjoyed this clip and you want to continue your financial education journey, I have another video that I think you'll love. All you got to do is click that button right over there. And for those of you who want to stay up to date on the top finance and business news, you can join Market Briefs, my free financial newsletter, by clicking that button below. Thank you for watching, and I'll see you in the next one.